Investors and traders, welcome to the channel Market Chart Pattern. Today is 16th of June 2023. In this video segment, we will be taking a look at the key US stocks that we have been following for quite some time. We will be taking a look at the Tesla stock, which we have been following, and we did a special report on it. Do check that out. I'll put a link in the video description, and also towards the end of the video, a link to it. Also, we'll be taking a look at Apple, Microsoft, Amazon, Meta, formerly known as Facebook, and Netflix, and Roblox. And also, we will be introducing a new stock to our list, and that is Shopify. So, we'll be also taking a look at Shopify towards the end of the video. This video is for educational purposes only, and it is not a financial advice. I do apologize in advance. This video could be a little bit longer just because of the material that we have to cover, because of the so many stocks that we will be looking at. So what we are looking at is, at the moment, in front of the screen, we have the Tesla stocks daily chart. Here, the key pattern formation on the daily chart level we are looking at is this pink shaded area, and anywhere between $268 to $270 is the kind of shorter term target that we are watching for. The stock made a high of $263.60 today, so it came pretty close to our target in terms of the range that we are looking at on the daily chart. Just quickly on the weekly chart, again, this is where we'll have that $268 to $270 per share level, and we have some higher targets as well, but in this video we are not going to discuss that. So one of the things that we were looking at was that, for example, if there is a pullback, then around what levels we can expect some sort of a correction or a pullback to take place. So one of the ways to look at this is that in this entire pattern formation, this is the highest, or in terms of the dollar values, the correction that took place was this much, and I don't know where the exact top will be, but just to give as a rough estimate, let's say if it's somewhere in that range that we are expecting, that is how much the stock had moved lower by. And also, if we take this retracement, then this comes around the also very close to the 61.8% Fibonacci retracement. Of course, guys, this is good. At the moment, these levels are a little bit approximate, because we don't know where the actual top is. In fact, if there is going to be a top or not, certainly it can keep on going higher as well. That's a possibility. But again, our purpose is to be prepared. And if we just do a retracement of all of this move from 105, then we also have this 38.2% Fibonacci retracement coming around the $200 per share mark. So it is just giving us a zone, a confluence level of somewhere between 200 to a 195 level, for example. So I will just highlight that here as a potential possibility for a pullback. So let's just remove this and also remove this, so the chart remains cleaner. I will leave this here for now. I don't know whether it will happen or not, but we have to be prepared. And also somebody asked this question as well, so answering to them as well. Let's take a look at the Apple stock. So Apple actually met our target of the range of $171 to $175 per share level, and in fact it has exceeded that. And what it has done is it has taken the low highs of the 4th of January 2022 and made a all-time new high. Here we also have there was a video I've done for longer term cycles for Apple, and I will try to put a link to it. But these are the regions where $187 per share level, 190, is the kind of levels that we are looking for, perhaps for a pullback to happen. If indeed it will happen, we do not know, so we'll keep on watching the price action. Let's take a look at Microsoft. So the Microsoft stock is very interesting, and of course we were looking for the $320 per share level as our target. It met our target, it also exceeded our target, so that's good. And what it has in fact done is it has also, just like the Apple stock, taken out its highs, all-time highs of 22nd of November 2021, and there's a possibility maybe it could also be a double top here, just because of the price action. So that's why I've written double top here. And for now, we'll just be watching the price action and see whether there's going to be a pullback or not. But from a momentum perspective, it's the momentum is very strong for this one, because the price is above the 20-day moving average, which is something shorter-term traders like to take a look at, and also the 20-day moving average is above the longer-term 200-day moving average, which is in this green, which is going to be in this gray line here. And that means that there is from a momentum perspective, the stock is also looking good. Let's take a look at the stock of Amazon. So the Amazon stock has been one of the stocks that we have been following for quite some time, but it's also the one which gave us a little bit of trouble in terms of the target that we were looking at. And at one time we were wondering whether $120 per share level is what we were looking at, whether the stock was actually going to achieve that or not. And the reason is this, that after our ABCD target was met around here, we were expecting a pullback to perhaps around $102 per share level, which was going to be around the 61.8% Fibonacci retracement of this AB leg, or this swing here. But in fact, the stock broke below that, and what it did was it went and found support right at the 78.6 Fibonacci retracement of this entire swing high. So let me try drawing it for you, like this one, and it found support at the 78.6% Fibonacci retracement. And that's as long as this level was held. And also we drew this line, brown line, 96.40, whether if the price was gonna be trading above that and held that as support, we were more positive on the stock's price action, and we were looking for $120 per share level, and in fact that was met and exceeded. For now, we are not looking for higher prices in terms of our targets at the moment, and we are watching the price action. From a momentum perspective, the momentum is also beginning to look better for this stock. Let's take a look at Meta, which is formerly the Facebook. So the Facebook is forming a very interesting pattern formation. In fact, the last video which we had done on the stocks, we had mentioned this, that it was right at this 61.8% Fibonacci retracement, and also one-to-one projection, which we like to call ABCD, and that could provide some resistance here. And the stock had been pretty strong from a momentum perspective, because of some macro development. For example, the interest rate decision to hold the rates by the Fed, for example. So from a momentum perspective, the stock is also pretty good. So what it did is, in fact, it is hovering around those levels, but it in fact also went a little bit above the 61.8% Fibonacci retracement, and also the one-to-one price projection, which we like to call ABCD. But again, we have to keep on watching this. For now, I do not have any further targets to watch, because this target has been achieved. So just watching the price action, and wait and see what will happen if in fact there is going to be some sort of a pullback in this stock. Let's take a look at Netflix. So the Netflix stock is also very interesting. This stock, in fact, all subscribers will know that we were looking for a possible scenario where we looked at when it reached this level of $367 per share level, which was actually 38.2% Fibonacci retracement of from its highs, all-time highs, to the lows reached back in May of 2022. That maybe it's going to do an ABCD pattern and could move actually a little bit lower. That was one of the pattern formation we were watching, and then we also had the alternative that it in fact might do the opposite. And for that, what we were looking for was as long as $315 per share level were not broken to the downside. And the reason was that I believe there was a Fibonacci retracement which I've deleted. So there you go, you can see that this was right at the 61.8% Fibonacci retracement. So this is what we were looking at that time, that as long as this 61.8% Fibonacci retracement, roughly around $315 per share level, was held, the stock would actually move uh, to the upside, and that would actually in fact give us an ABCD one-to-one projection higher. So far the stock seems to be moving in that, but today it had a strong close lower. From a momentum perspective, stock is still pretty good, and what we are still looking for in terms of the pattern is actually roughly around $500 per share level. Whether it's going to go and do that before having a pullback, I do not know. But this is the pattern formation that we are watching, and we have the one-to-one price projection of ABCD, and also we have this 61.8% Fibonacci retracement coming all the way from the highs of around from 16th of November 2021. So this is what we are looking at, so somewhere around $490 per share to about $500 per share. Let's take a look at Roblox. Alright guys, so Roblox, this is a very interesting stock because it has to do with the metaverse. So this stock actually came through a SPAC, so it was a special vehicle used to make the company public. And what we have seen is a huge decline in the stock, uh, but we have seen pretty good base being formed from the 10th of May 2022, so a little over a year now. And what we think the stock might be doing is actually moving in an ABCD formation higher. So we are looking anywhere between about $56 to about $60 per share level. That's the kind of area we are watching for. But the condition for this is that this $33.63 must be held, because this gives us our A, B, C, D one-to-one projection higher. And we also had a nice ABCD here, so it is pretty strong support level. If this level is broken to the downside, then we are looking at a different kind of pattern formation, which would take the price much lower. But for now, as long as these $33.60 are held, we will be looking for our target being $56 to $60 per share level. How long it will take for the stock to achieve that, I do not know. There are a number of resistance levels that just come from the structure, such as from this region around $47 and then $53, that the stock also needs to overtake in order for us to achieve the price target that we're looking for. From a momentum perspective, this stock is just hovering above the 20-day moving average, which is above the 200-day moving average. But what we really want to see is this gap between these two averages getting bigger, because that means that the shorter term momentum is actually pushing the 20-day moving average higher, because the price is moving higher quite rapidly. So we have yet to see that, but it's good to see that it's just hovering around this level, which is also a positive development. So that's good. Now let's move to Shopify. So this is going to be a new stock which we have added to our list, and we will be following this in our videos, this video segment, um, which we like to do at least once a week. But at times we do it from 2 days a week as well, and especially on a weekend. So here what we have is this stock. Let's say actually go on a weekly chart, is easier to see a few things here. What we can see is that this stock had a massive run up during the pandemic years. So that's from March of 2020, and this stock is actually really closely affiliated with e-commerce world as well. because it is kind of a shopping cart, which lets you build a nice website, have a shopping cart through its various integrations with the payment providers. Also, they do the hosting, so they have nice servers which can give good speed for the loading of your website. They, I think, have different kind of payment options, depending upon how big your website is, the kind of traffic it gets. So it has, I think, different revenue models for that. And then it links nicely with other marketing platforms like Google marketing, etc., social media, which also help drive traffic to your website. But what we have seen is just like also for Amazon, from the pandemic highs, the stock has actually fallen a lot. It's difficult for me to do the exact retracement, but just eyeballing it is somewhere close to that 78.6% Fibonacci retracement, and in fact, on the weekly chart we can see it's a little bit below that as well. However, what I was something that I would like to point out is that it has got a nice um, a if I can draw it for you, a nice kind of this cup formation here, like this, and like this. And something interesting that happened was this, that price broke above that, then it pulled back right into it, it found support, and what we have going on is actually a nice channel like this, which I'm going to show you more on the daily chart, but I just wanted to visually show it to you on the weekly chart, because at times it's a little bit easier to show a bigger picture. So having done that, let's move to the daily chart, and this is the channel that we were looking at on the weekly chart, and you can see it's quite nicely supporting with higher lows, and we have had higher highs as well. In the pink shaded area is a bit of a pattern that we were watching for. It's actually called a three drives to a top pattern. There was nice harmony in there. We have seen a um, nice pullback, and then where the stock closed here is kind of still in that region. So here the important thing to know is, of course, this nice cup formation which we have seen on the weekly chart, a pattern of higher highs and higher lows, and this channel formation right here, which can actually, which is really, if we draw it like this, is also challenging these highs which the price likes to take out, and then it just comes back into the channel, then finds support from the bottom of the channel, and then it likes to move higher. So one of the things that we can do here is actually uh, draw this line here. Let me clone it, and we can see this. Let me clone this again, and it's just gonna be, if there is gonna be some sort of pullback, then we could expect it to go to the bottom of the channel to find support there. And look on the daily chart, this is the 200 day moving average, the price is above that. This is the 20-day moving average, the price above that. The gap between these two is quite wide, which means that the price has actually accelerated through and moved higher, in a quite nice pace. So the stock is actually showing good strength. In my opinion, is showing signs of accumulation. And if this pattern of higher highs, higher lows continues, then what we are looking for as an immediate kind of a shorter term target is about $82 per share. So like, actually, let me highlight it here, like like this one here. So roughly $82 per share level, and the reason is this is the 38.2% Fibonacci retracement from the all-time highs the stock had reached, and the lows reached in 13th of October 2022. So that's last year, October. So that's gonna give us a pretty good idea. If the stock begins to move higher than $82 per share level, that's going to be a very good development for this stock. If the stock finds a resistance from here, moves lower, then it could have a deeper retracement and the possibility of actually going and touching these lows, or maybe even lower, moving lower. Remains a possibility, but $82 per share level is the level that we're watching. Moving above from here is basically going to be very positive for the stock. Then we will begin to look at it in a different formation. So for me, in other words, that's an indication that the bear market for this stock might be over if we begin to close convincingly above the $82 per share level for at least 3 to 4 days, or maybe a week. That's the how I am looking at it. So guys, thank you very much for watching the video. If you like our analysis, how we look at the market using different patterns, Fibonacci ratios, then please do subscribe to the channel. And if you found this video of educational value, then please do like the video. It just gives me an indication that people watching the videos find value in these, and it encourages me to keep on bringing more videos for you guys. As you know, it does take some time to actually make these videos and do all this analysis, so I really appreciate that. And I do apologize that this video has gone a little over 20 minutes. That's a fairly long video, so I'll just cut it short now. And I really thank you guys for watching the video and my content, and I wish you good luck and good trading and a very good and prosperous weekend. Thank you.